Hi guys, welcome and welcome back to my channel. Thank you guys so much for coming back to another video. If this is your first video, thank you guys so much for clicking on this video. I really hope that you guys will find some information that will motivate you, inspire you, or definitely cause you guys to think about the Canadian dream and also cause you to subscribe to this channel. Also, if you are new here, what you get here guys is authentic Canadian content, coming to Canada as an international student, been through the rigs, finished school, post-grad work permit, now permanent resident of Canada. I try to share my journey authentically so that other persons can benefit from my story. So if you like this kind of content, as I said guys, just hit that subscribe button right down below, hit that like button and drop a comment. All right guys, now what I'm going to be talking about in today's video is a topic that a lot of persons have always been reaching out to me about, to speak about. What I do for a living. I am a banker. I work in a bank, and more so I'm a financial advisor. So in this video, I'm going to be sharing with you guys all you need to know about applying for a credit card in Canada as an immigrant. Now, I'm going to be touching on topics such as how do you build your credit, and also what's the best way to start simply investing if it is that you're an immigrant in Canada and you want to like give yourself the best chance or the best platform to succeed in the future. Now what I would like to say guys is that it is very possible for you guys to access a credit card as an international student, as a temporary worker, or as a new immigrant to Canada. Many of us are from countries where it's very difficult to access a credit card, or it's very difficult for us to open a bank account and other form of banking products. Now, one of the best things about Canada is the ease of which you can get these services done. Now, when I just came to Canada, guys, I thought that it would have been a difficult process to open a bank account. Coming from Jamaica, it was a very tedious process where it required a lot of documentation, a lot of back and forth, employment verification, and a number of different stuff. But here, all you need is proof of status and a general ID. And your ID can be your international passport as well. So yes, as long as you're able to show that you are legal in Canada to live and work or study, that's all you need in addition to a photo identification, most banks, right? Now, of course, it depends on the product that you guys are applying for. Some banks ask for additional information, but for a basic day-to-day account, all you need is proof of status and a photo ID. Right, now let's talk about a credit card. Now, I know that persons are watching this video from all around the world, so I'm going to explain what a credit card is. A credit card is a card that gives you credit, a credit limit, and it gives you access to that amount of money. It's actually a loan, right? So when you get a credit card, you get it with a credit limit, and you use that limit, you pay it back, you use it again, you pay it back. It's actually revolving credit. Now, a credit card is one of the best ways to build your credit if it is that you're new in Canada. Now, Canada is a credit society. Now, coming from a country like Jamaica where it's predominantly cash, most things is purchased on a cash basis, like your phone plan, your everything. Most things apart from your major assets in terms of your house and your car and stuff like that is purchased by cash, right? Now, Canada is the total opposite. Most things is done on credit. Now, having a good credit score is very important in Canada. Now, a good credit score can determine where you work. A good credit score can determine where you live. A good credit score can determine what kind of car you drive, what kind of house you live in. All sorts of stuff can be determined by your credit score. So it's very important to take your credit very seriously, especially as soon as you land, because it's something that if left unattended, it can have serious implications in the future. Now, applying for a credit card is very straightforward as a new immigrant. Now, a lot of persons also doesn't know that as an international student, most banks offer newcomers credit card. It has a smaller credit limit, but it gives you the ability to start building your credit by using that revolving credit, right? So as soon as you land, one of your main focus should be to get a credit card. Now, don't listen to other people who say, oh, don't get a credit card, don't do this, don't do that. Because here in Canada, no credit is just as bad as bad credit, right? Get that facts straight, guys. Having no credit history is almost just as bad as having bad credit history. So as soon as you land, you want to start building that credit history, and the best way to do it is to get a credit card. Now, be very careful not to get a credit card with a large credit balance, because a lot of persons doesn't have like good spending habits, and it might cause you to run up that credit card and unable to pay it and hamper your credit score rather than benefit your credit score. Luckily, most banks give newcomers a limit. Now, I know of at least 3 banks that gives international students anywhere between $500 to $1,000 as a starting credit limit, and a temporary worker as much as $3,500 as a starting limit. Now, I would suggest that you take it, take advantage of it, because the sooner you start building credit, as I mentioned, is the better it is for you. Now, what it is that you need to apply for a credit card is pretty simple as well. Now, for an international student, you need proof of status, which is a study permit document and an ID, right? And the difference which determines whether or not you are given a $500 limit or a $1,000 limit, it depends on whether or not you are employed. If you are employed, all you need is to provide one pay slip along with your study permit and your ID, and you are eligible to get at least $1,000 on a credit card. It doesn't matter how new you are in Canada. As an international worker, you need to prove that you're working along with your work permit and an ID. That's all you need in order to access a credit card in Canada, and you can get a credit limit of up to $3,500. Now, it's so important to manage that credit card pretty well, because getting it is one, but managing it is another story. Now, using it, paying it back, using it, paying it back, as in using it, paying it in full, using it, paying it in full, doesn't really build your credit history as much, contrary to what other persons might say. Now, you want to always make sure that there's a credit balance on your credit card, right? So having a credit balance shows that there's always credit, and then you pay back that credit balance on or before the due date, making at least the minimum payment, and then that will start to build your credit history, right? If, for example, you have a credit card and the balance and the credit limit is $500, and you use off that $500 and then you pay back that $500 immediately, then there's no revolving credit, because ultimately you use it. So you want to make sure that there's always a revolving credit at the time of your statement. Now, what you want to do is to make sure that when the credit card is due, you pay it either in full or make at least the minimum payment when the credit card is due, right? Now, your credit card statement date is different from when the credit card is due. You want to make sure that you know the two different dates different from each other, right? Because when the statement date is there, you want to make sure that there's always a balance for the statement to generate, but also when it's due, you want to make sure that you either pay it in full or you make at least the minimum payment in order to show that you are keeping up with your credit card. And that's how you start to build your credit history. And then that's what's going to determine the type of jobs you get. Because working in a bank, you cannot work in a bank unless you have a specific credit history, credit score. And banks here run your credit as a part of your background check when it is that you are thinking of applying for a job. Not just banks, a lot of other institutions do this as well. They run your credit to see what type of credit score you have, and that determines whether or not you are successful in getting that job or not. So you want to make sure that you are building that credit from the offset, from the get-go, and start, build brick by brick by brick by brick. Now, of course, guys, as I said, I'm just sharing some information with you guys. I don't think I've done enough of this video where I sit down with you guys and tell you guys the formula in terms of how to build your credit, how to maintain your credit, and also how to invest. Now, the other thing that I want to talk about briefly, guys, is how do you invest as a temporary worker or an international student in Canada. Now, the traditional way, guys, that most persons would probably know about already is opening a TFSA or a RRSP plan. Now, you might have heard these terms before if you're in Canada, but if you're not in Canada, let me just explain what these terms are, okay? Now, your TFSA is an acronym for tax-free savings account. Now, what is a tax-free savings account? Many of us would have become accustomed to having a savings account. Now, on a savings account is you put your money in there, of course, money that you are intended to save, assuming, and you get it at an interest rate. Now, most interest rate on a savings account is very, very small, depending on the bank that you go to, right? Now, the interest rate can vary from bank to bank, irrelevant. Now, whatever interest you earn on your savings account is taxable, right? Any income that you earn in Canada, including interest on your savings account, it is taxable, which means that if you have $1 in interest, you're not getting the entire $1 because part of it is going to the government, right? So that's what having a savings account does. Now, having a tax-free savings account, hopefully it makes sense to you now, is whatever interest you earn on that tax-free savings account is non-taxable, right? So if it is that you put in a specific amount, whatever interest you earn on that specific amount is non-taxable. So a lot of persons open tax-free savings account and they invest it into stuff like GIC, which is guaranteed investment funds, certificate. They buy GICs and stuff either for 18 months, 6 months, 1 year, depending on the bank. Now GICs usually give you a higher interest rate. Now GICs are fixed funds, like in Jamaica you'd call fixed deposits, right? Now the bank invests these funds, make a profit, yada, you get it at a specific interest on your money. Whatever you earn in a tax-free savings GIC, for example, is non-taxable, non-tax whatsoever. So in other words, if it is that you want to save, instead of saving in a savings account, open a TFSA. Make sense? Yes. Open a TFSA and then you can diversify that TFSA either by putting it into mutual funds or putting it into a GIC, and then that will definitely get you more interest. Not only that will it get you more interest, but it will definitely be non-taxable, so you get back all of your interests, right? Now the other thing that you guys want to look into is your RRSP. Now what is your RRSP? Now I've seen a couple of videos online where persons are explaining what an RRSP is, but let me just break it down for you guys very simple, so you guys can understand exactly what an RRSP is and the importance of having an RRSP. Now the acronym RRSP is Registered Retirement Savings Plan. Now in Canada, this is pretty much your pension. You're saving towards a pension, right? So you save this money to make sure that when you get to the age of retirement, you have enough money that can suffice whatever lifestyle you're living right now. That's the intention of having an RRSP, right? Whatever money you save in your RRSP, when it's time for you to retire, that money should be enough for you to maintain the lifestyle that you're living now or the lifestyle that you want at that age. Now there's a many benefits with opening an RRSP plan. Now one of the biggest benefits of opening an RRSP plan is whatever money is saved in your RRSP for the year, it's deducted from your overall income for the year. Now, how Canada works, you have to pay your taxes. Now, I'm making it very simple so you guys can understand exactly what I'm talking about, right? Now, when you file your taxes on the income that you make the previous year. Like, for example, we're coming up to tax season 2023. Whatever income was made in 2022, we pay taxes based on that, right? Now, you have an overall amount that you earn. Say, for example, you earn 50,000 Canadian dollars for the year. Argument's sake. If you earn 50,000 Canadian dollars for the year, and then you have $10,000 in an RRSP, you're only charged taxes on the 40,000 Canadian dollars because the $10,000 that's in your RRSP is non-taxable. Now, you can't just arbitrarily put any amount of money in your RRSP. Otherwise, a lot of persons would probably put all of them salary in an RRSP. There's a limit as to the amount that you can put in an RRSP, and that limit is determined by your overall assessment. So you get what is called a notice of assessment for the tax year, and then that tells you the amount that you can contribute maximum for the year. Like, for example, you file your taxes now in 2023, you will get what is called a notice of assessment, and that notice of assessment will tell you the maximum that you're able to contribute in 2023 in an RRSP. Now, it's very important for you guys to max that out. Max it out, because it makes you pay less taxes, right? And be beneficial and probably benefit from more government services. So you want to definitely max out your RRSP as much as possible. But as I said, your RRSP is really determined by your notice of assessment. So everybody have a different figure. Now, another benefit with the RRSP, guys, is the fact that you can access your RRSP when it's time for you to purchase a house. Now, whatever money you withdraw from your RRSP, usually, if it's not intended to purchase your first house, it automatically becomes taxable. So remember now, if it sits there, it's non-taxable. But if you take it out, it becomes taxable immediately after you do an RRSP deregistration, as it is called. Now, if it is that you take out your down payment from your RRSP, it is non-taxable, but you have to pay it back within 15 years. Make sense? So if, for example, your down payment for your house is 20,000 Canadian dollars, and then you access that 20,000 Canadian dollars from your RRSP, make your down payment, that $20,000 is non-taxable However, you have to pay back that $20,000 back into your RRSP over a 15-year period, right? So technically, it's like borrowing from yourself to pay back yourself. Makes sense, right? So that's the benefit of having an RRSP. Now, what I didn't tell you guys about a TFSA is that a TFSA has an overall annual contribution limit, and it has an overall lifetime contribution limit. Now, at the time of doing this video, guys, the limit per year in a TFSA is $6,000, right? Now, every year it fluctuates. Sometimes it goes to $6,500. Sometimes it goes to $5,500. It's been $6,000 for the past couple of years, right? That's the maximum amount that you can contribute in a TFSA here in Canada. Now, you can have a multiplicity of TFSAs in different banks. However, your total contribution cannot exceed $6,000, right? So if it is that you have a TFSA here, so with John Brown Bank, and you have another TFSA over here with Mary Jane Bank, all together, you cannot exceed $6,000, and that's at the time of doing this video. Now, as I said, it changes every year, so it might be a different figure for this tax year, okay? Now, your lifetime contribution in a TFSA cannot exceed $75,000, right? You have to remember that. That's your cap. It cannot pass that in your entire lifetime. $75,000 is the maximum you can put into a regular TFSA. All right, guys. Hopefully I'm not making it too complicated for you guys, and hopefully I'm simplifying it for you guys so you guys can understand exactly what these terms are and how it can be beneficial to you as a new immigrant. As a new immigrant, benefiting from paying less taxes is definitely a must. So opening your TFSA and RRSP is definitely a must. And building your credit is essential. Building your credit is essential. Now, if you have gotten anything from this video, guys, please consider subscribing to my channel, smashing a like, and leaving a comment. If you guys want me to do more of these videos, consider dropping a comment. Let me know, and I'd be happy to do some more of these videos for you guys. All right, hopefully I was able to motivate, inspire, and educate in this video. Until next time, see you guys in the next video.